Street View segment, Nirav Sheth, Head of Sales, Institutional Equities with Edelweiss Financial Services joins us. Nirav, good afternoon. Thank you for joining us. IT is taking it on the chin. Why is that? 3 months ago, everybody wanted to buy into IT. There was not even a single sell report on IT. Now IT stocks are just cracking as if there are no takers.
Yeah, so I think markets tend to overreact either ways, right? So at some point of time, the gain, the delta gain in market cap or in terms of PE expansion was significantly, and to a large extent also led by the fact that you have to see a tailwind in terms of rupee. And nowadays I get to see a lot of reports around what will happen if there is a strong political outcome and what rupee does, and therefore there's a reverse trade in software. I think so outside the noise, I think we'll have to try and figure out what is the core growth in earnings, assuming a particular state of the rupee. And my sense is that software stocks certainly offer value after the kind of correction that you've seen. And I would like to highlight that we'll have to keep in mind that it is not that we'll see a one-way appreciation in rupee, because, and I can be completely wrong, but I think there is a merit that at some point of time it makes sense. Then RBI will start building up their reserves. I mean, you've seen reserves doing nothing in the last 4 or 5 years. Your size, the economy size has almost doubled. And can you potentially see a 2 or 3 year time frame where you should have $450 billion? Yes, you should. So I would tend to believe that there seems to be some amount of overreaction that is natural, because and it's not in India, right? Look at how Nasdaq has corrected. So all those sharp gainers of 2013 are seeing some sort of profit taking. This happens all the time. I'm not too worried about any change in a structural outlook on a software sector.
Nirav, what is it that you're doing with the pharma pack? Because that seems to be the one which is heading for new highs every day.
Yeah, so I think the pharma, unlike consumer sector, has got far better valuations when you look at the long-term earnings growth rate, when you look at the long-term productivity ratios that these companies enjoy. And obviously, I think the recent fillip is also because of, almost a coup that Sun Pharma has played out with acquisition of Ranbaxy. As a matter of fact, you upgraded the stock after the acquisition, and I think it's a very, very sensible deal. And obviously, you cannot figure out what's going to happen in the next 1 year. On a 2-3 year perspective, I think there is a significant delta in earnings that can come. So these are all event-specific things. But you have to appreciate the fact that the sensitivity of rupee to pharma earnings, I would tend to believe, is lower than what you see for the software, because the valuation is far much higher. And it's not that pharma has done well because you've got a rupee edge. You've done well because there are a lot of structural advantages that the companies enjoy. None of them has gone away. So, and like I said, first of all, I would not want to sort of generalize for the entire sector, because there's a lot of individual companies, all of them have different strategies, but there are some interesting ideas over there. And one more point that I would want to highlight is you should have reasonable required rate of return when you start investing in the sectors. It is not that you would expect the stocks to do 30%, 40%, those kind of stuff. If you work with mid-teen sort of return expectations, I think that you can construct a portfolio of stable stocks.
Do you think buying into Ranbaxy could be a good way to get a cheaper entry into Sun Pharma?
Yeah, of course. I've not. In the morning, at least when I looked at it, I think the gap was close to about 9%, and I think it's safe to assume that there is a high probability that the deal will pass through. And you've seen it historically that anyway you need to have this 9.5% gap so that you get the arbitragers in who try and borrow, and then the most sensible trade is to, let's say, buy something and short something and try and earn that spread. So that explains it. But as you start moving towards the execution, that is in terms of once you start getting the approvals, in terms of the courts, in terms of various other approvals, the discount seems of narrowing. Like I said, if you've got a similar view that you have got, that there is a very high probability of the deal going through, then you're better off buying into Ranbaxy for sure. You're buying Sun Pharma 10% cheaper, broadly.
Some of the auto names as well of late have been doing well, and today the cases in point being Ashok Leyland and Tata Motors as well. Anything that you like out of these two names?
We like Tata Motors, we've liked it for quite some time. The view doesn't change, but I would tend to believe that on an incremental perspective, we'll be far more bullish on Maruti. simply because of the fact that, now whatever, at least our understanding of the new structure of the deal is that you're probably getting access to new products at a 0% IRR. That is, the new factory will operate at a 0% IRR, so that helps my capital productivity going forward. Secondly, to keep in mind that, my car volumes have not done anything for the last 3 years, and this is a highly aspirational item. So once my animal spirits change, my view of income dynamics change going forward, I think there's a lot of pent-up demand. So if I talk today that, my car volumes can grow at 20%, 25% next year, probably I'll be looking stupid. But that is very much in the realm of possibilities. Also keep in mind that when you look at something like Maruti, you've seen the worst of the competitive launches behind you. So you've got a clear 2-year run where, you don't have too much of competitive launches, which is necessary in terms of PE expansion. There is a high probability that my car volumes will come back with a bang, and a lot of things are in place. So I'm, like I said, it's slightly taking a view which is a couple of quarters out. But broadly, our perspective on auto sector is fairly positive.
I want to mark metal stocks once again. Hindalco at a fresh 52-week high of 143 rupees. Tata Steel 41610 rupees up 52-week high of 432. Sesa Sterlite 1517 rupees away from its 52-week high. Nirav, if one works with the assumption that we will get a stable government and Narendra Modi will be the next PM who will be able to magically turn things around, the outlook for metal will not improve because there is serious overcapacity in the global market. There is almost a glut in the steel cycle. China is a huge problem. So I wonder what is driving metal stocks.
Yeah, so I completely buy your point. But I'm saying is that, first of all, if you look at the metal prices, they have not done much. So it is very, very stock specific in terms of what has happened. So this is beyond the realm of the discussion, but you will isolate the different metal stocks because there will be certainly in some cases where there will be earnings accretion coming through just because of capacity expansion that takes place. But outside that, I think what happens is that you would appreciate the fact that commodities or metal stocks by nature are slightly volatile and the anchoring keeps on shifting. So for you to take a view on metal stocks, at some point of time, the entire downfall in metals was driven because you're worried in terms of the slowdown in China. From there, I think the entire market focus has shifted to the fact that, what is China going to do about it? So now we're talking about what sort of stimulus you are going to expect from China, either in terms of monetary stimulus or in terms of fiscal stimulus. And then once that market expectation shifts, you are looking at different data points that will drive the metal stocks. I think probably what is happening in metal stocks is that you are looking to what can China do to improve the growth rates, because the last couple of months data points in China have been pretty bad, and you are working with a hypothesis that the Chinese Premier has said that 7.5% GDP growth rate is a cutoff. Below that will act. Outside that, I would be very, very suspicious participant in the current rally. That is the way I look at it.